Nice name for a penny stock company. Worry-Free Tea House Holdings Company. It makes me think of a chain of cute little cafes where one can come and try a cup of herbal tea. A menu board with all different types and flavors. I looked up the latest financial report for the company, hoping to discover a location close by or soon to be opened. What did I find was a surprise. That corporate name means nothing. What then does Worry-Free Tea House Holding Company do? Keep watching and I'll tell you. I'll tell you what the business they've been involved in, who runs the company, and give you an opinion as to whether the penny stock is worth investing in. But first, let's review some important considerations involving investing in penny stocks. Depends on which trading platform you use will determine whether you can even trade them or not. Some won't allow trading in any stock with a price of $1 or less. Currently, this one, with the trading symbol TEAH, is at 0.0002. 300,000 shares would set you back only $60. Remember that 300,000 number, as it'll be talked about later. How about the past history of Worry-Free Tea House Holdings Company? It was formed in 2007 as DRS Incorporated. The company originally installed drywall in house construction and recycled old drywall. Think of it as a drywall recycling service, or DRS. Get it? Before doing research on the company, I had never heard of recycling drywall. The process was fully explained in the SB2 form document. When drywall contractors finished their work at a job site, DRS would send a truck and employees would pick up all the excess and cut pieces left on the floor. After loading the truck, it would be taken and unloaded at one of two DRS yards at Maltby or Milton, Washington. Once they got several tons of wallboard together, they would take a larger trailer and transport it to a nearby gypsum wallboard plant so that it could be recycled into new wallboard. Now, the company only got debris and old wallboard from new construction. They never did go into remodels or demolitions because that wallboard would have had paint on it and that would ruin and contaminate it. So they only dealt in new wallboard, and they would take it to the gypsum plant, and with the trailer they had, it was easy to create a backhaul of other types of freight on the way back to the plant. So they had a small trucking operation as well. At the time, there were 19 laborers, 2 truck drivers, 2 clerks, 2 dispatchers working for the company, and they had a total of 20 trucks. They operated in Washington, but planned to start operations in Oregon around January 1st of 2008. Let's talk about who ran the company. The president was Daniel Mendez, who lived on Mercer Island, Washington. He was age 48. Daniel Gounod resigned as president on August 1st, 2007, and Daniel Mendez became president. George Gounod, who is related to Daniel, became secretary and treasurer. However, Daniel Gounod remained as a consultant. Now, Mendez and George Gunot each owned and operated their own separate drywall construction firms. Mendez was vice president and owner of a company called Red Hawk Construction Incorporated. And here's his background. From 1982 to 1984, he was assistant terminal manager for Pacific Western Lines. Had nothing to do with construction. From 1984 to 1986, he worked for Seaway Express in Alaska. Again, no relation to construction. And from 1987 to 1996, he worked as a dock supervisor for Roadway Express in Seattle, Washington. George Gunot, on the other hand, owner and president of Living Home Construction. Now, Daniel Mendez and George Gunot each owns 7 million shares of common stock in the company, each having ownership of 28%. All right. At the end of June 2007, assets for the company was just over $1 million. Revenues for the company was $1.4 million. Net loss, $10.7 million. Compensation. Daniel Mendez was making $2,500 a week. George Gunot, $1,500 a week. Daniel Gunot, $2,500 a week. Now, both Mendez and Gunot, who already mentioned, owned their own construction and drywall firms. For each of those companies, they devoted 40 hours or more a week to their operations, leaving very little time for the DSR operation. But if they were doing so well in construction with their personal companies, why would they have needed $1,500 a week? Interesting. Maybe that's a big way to contribute to the $10.7 million loss at the end of June 2007. This chart shows the revenues and net losses for most of the quarters through the years while DSR Incorporated was engaged in the drywall recovery business. As shown, revenues grew steadily through 2008, almost reaching $1 million in revenues by the end of the quarter of March 2009. At the same time, net losses declined to the point of just about becoming profitable. Then things changed. Revenues began dropping dramatically, and losses increased. At the same time, retained earnings, or total deficit, continued rising. In December 2008, the company deficit was $11.2 million. By September 2011, it was $13.4 million. In September 2009, management planned to raise capital through an offering of its stock and said they would use the proceeds to purchase leased equipment, estimated to save $475,000 in leased truck expense. It wasn't enough. In September 2010, the company ceased operations and shut down, bringing an end to the drywall business. On February 12, 2012, the company ceased operations and shut down because it just was not feasible to pursue its plan to re-enter the drywall recycling business. The decision was based on the state of the housing market in the state of Washington, overall economy, and lack of capital. DSR stopped filing reports with the Securities and Exchange Commission. Fast forward to March 6, 2018, when the district court appointed David Lazar as custodian of the company. Worry Free Tea House Holdings Company began as the new entity. Dr. Dong Quan acquired controlling interest with 90% of the stock, 910 million shares. According to the latest financial report, The company is a shell corporation with no products or services. Okay, then how did the firm have revenues of $68,635 in the quarter that ended December 31st, 2025? Most shell companies do not have over $1 million in assets or even any receivables. The only item on this balance sheet that makes any sense is the accumulated deficit at the bottom. Yes, that's $13.3 million accumulated from day one as DSR Incorporated. And one final thing I want to show you is this. Total shares authorized is 1.1 billion shares, and outstanding and issued is a little over 1 billion. But wait, most of that is restricted shares that can't be traded. Unrestricted shares total only 320,760 shares. Not much public float available. Remember from earlier I asked you to keep that 300,000 number for later? That means if you could buy all of it, it would only cost around $60. A billion shares, accumulated deficit of 13 million. Sounds like the only way to move the figures would be to do a massive reverse stock split. When that happens, kiss that $60 goodbye. I don't think this is a company worth even looking at. If you wanted to throw away your investment dollars, there's better companies with a better balance sheet and better explanations than this one. If you've liked this video and you found it informative, hit the like button and become a subscriber. There's a lot of penny stocks out there to talk to you about, and I plan to do that.